Joining us now for a look at the markets in Kenya is Ronald Lugalia, who is the investment analyst at EABL Capital Limited. Ronald, thank you so much for joining us this morning. Earnings season is underway. Let's get straight into it. East African breweries coming out with their results. They've reported a 38% drop in full-year profit after tax. If you mentioned in their headlines, hurt by a number of factors. Are you able to unpack some of those for us?
Okay, thank you for having me on this show. EABL has released the results, a 37% drop in PAT, mainly because of increased cost of sales that we saw a drop in its sales margin in its beer products. And also, there was that impact on the other income whereby we didn't have the sale that happened in 2012 of one of their stakes in KBL.
Let's talk about one of the factors that came out in their profit warnings that has put a squeeze on their margins, and that's the high cost of borrowing. Looking at the cost of financing that it took out from their parent company, Diageo. What do you make of that in terms of the high financing cost? Because it seems to be a reoccurring theme.
Okay, financing cost is something that now an investor now would want to look at, noting that in the past year, in 2012, the impact was only for 3 months. This time around, the impact maybe is going to be for, the full impact of the 12 months is going to be felt year in, year out going forward. But still same, we've seen it make strong investments, trying to boost its capacity, trying to bring in, trying to fed off the competition that now we've seen in this region. But still the same, it's something that is of a concern, because you might find that now it might even raise the gearing level, and then now the initiatives to expand in the region, or even to utilize its capacity fully to meet the competition that now is happening around here would somehow be challenging.
Now, Ronald, tell us about your views on the share's performance, because over the past couple of months you've seen it take quite a fall. I mean, we spoke about this yesterday as one of our market watchers saying, it's the foreign guys that seem to still be buying into the share, whereas the local retailers are not so keen on it. I mean, what's your take on that?
Eastern Breweries has been one of the stocks that most investors, both foreign and local, and mostly institutions, have had a keen eye on it. It has improved its liquidity, and then now its float has also improved in the market. And the fact that you've seen it, it's somehow volatile in the market. You would see some heavy speculative investors coming in, taking a position when it's low and getting out when it's high. You've seen in the last early this month, it hit a high of 447, and right now it has dropped all the way to 305 yesterday. So at that point, I expect most investors would still come in and even take a position regardless of its performance. But this will be merely because of speculation. And I tend to believe, even when you look at the market right now, there's still some strong underlying demand for that counter. Most are coming in, some want to get out. Foreign investors have taken almost 65% of the total activity on that counter. They are still strong on the buy side. So I still believe at the lower price of 3 or 5, noting that it hit 447 in the previous weeks, it will still attract investors to come in.
So you still seeing some value in that stock. Let's shift gears for a little bit and talk about Conneautville. Came out with their results yesterday. There was significant improvement there. They came to a profit after having a loss in the previous quarter. But they also said their group sales have been deliberately reduced. Can you give us an indication of the rationale behind that?
Conneautville, it had so much speculation late last year and early this year, but we've seen it shrug off that speculation for the new tech new acquisition or even strategic partner to remain resilient in the market. its strong performance in terms of its earnings, mainly it has been because of the engineering process that they have initiated, restructuring processes, and also cut on cost. And we've seen that there has been a check-up in the management and also the way they handle their business in the sense that the product mix and the sales management that now they are brought in has really improved their sales, and they have also been able to cut on cost and manage their cost to a level that has really boosted their top line.
So cost management is definitely the name of the game. Thank you so much for that insight, Ronald. That was Ronald Lugario, who's the investment analyst at EABL Capital.